SAP increased its sales outlook for the year as it benefited from increased global IT spending. New cloud bookings grew 25% at constant currencies, but the software company generated sales that missed the average analyst estimate. Let's talk about the business and where this confidence is coming from then. We're joined by Luka Mucic, the CFO of SAP, for the first of the company's first quarter earnings interviews. Very good to have you with us. Tell us, why so confident then as to upgrade your guidance today?
Yeah, thanks a lot, Anna and Manus, for having me on the show. We had a terrific start to the year. Q1 was certainly strong, especially in our cloud business, where we grew 31% at constant currencies. From a total revenue perspective, we grew at 9% at constant currencies, and we expanded the bottom line in double digits and hence also expanded the operating margin by 110 basis points at constant currencies. And that gave us the confidence to not only increase our annual outlook for the acquisition of Callidus Software, which we have just closed at the beginning of Q2, but also reflect the ongoing strength in our operational momentum, especially when it comes to operating profit, by increasing the lower end of our annual outlook beyond the contribution of Callidus. And we feel very strong about the market share gains that we are having and the momentum in the business. If you take our cloud business and translate it into US dollar terms, for example, we have been growing in Q1 by 37%, and that's a much larger gain than virtually all of our US-based competitors have seen. So we are definitely on a roll.
Luka, can I ask you then, obviously the cloud is incredibly important. The whole world is racing to grab more market share there. You've already done one pretty big deal with Callidus Software. Put that aside, that was the biggest in 3 years. Are you, to realistically grow the scale that you need in cloud, do you need to do a deal? Do you need to make an acquisition? Is that the step change for cloud, or is it organic? What is the thinking of the board?
No, we really believe that we now have a holistic portfolio in the cloud that allows us and our customers to really innovate with us on an end-to-end basis. With Callidus, we have basically completed the one missing piece in our lead-to-cash cycle that we still had. So our growth story in the cloud definitely will be organic. That does not rule out smaller tuck-in acquisitions, but when you look at our 2020 targets, they actually call for around about 30% CAGR in cloud revenue growth from now through 2020. That's extremely consistent with the organic growth rates that we have been able to show in the last 3 years. So we're equally confident that we'll continue on that march for the next few years without the need to resort to any major acquisitions.
And Luka, how confident are you about global IT spend? It's been on the rise. Will it continue?
Yeah, absolutely. When you just simply think about the fact that companies across virtually every industry need to completely digitize their operations. Actually, every company needs to be a digital company today, whether it's in manufacturing, in utilities, in retail, obviously, and not to even start talking about financial services. That will spur tremendous demand in IT spend for the next coming years, but it will be in smart categories. Clearly, spending in hardware will be outpaced substantially by spending in software and in cloud in particular. Those are the categories that we have fully concentrated on, unlike some of our competitors. And therefore, we are participating in an accelerated pace from this increase in spend that we see, especially at the software layer, where the true value for our clients is generated. And that has basically translated into the superior growth rates that you have seen from SAP, not only in Q1, but I would argue for the past few years.